know what, let's get a lot more voices on this as well. Why not? Ross Gerber, CEO of Gerber Kawasaki, Netflix shareholder. Ed Lee, media reporter at the New York Times. Bernie McTernan, Netflix analyst at Rosenblatt Securities. Bernie, let me start with you as the analyst here. What's your quick take on what you're seeing from these numbers?
Yeah, definitely. So it's that international subscriber ads are down year over year. That's a big deal for the company because international is really the growth driver here. If you see international start to fall and decelerate, increasingly it's going to be more of a profit-driven story. And because the company is generating negative $3.5 billion free cash flow, that's going to be a tough situation for them. So that's why growth matters so much. And it seems like they missed the mark this quarter.
Yeah, we're talking content right now. Julia Boorstin has more on that from this report. Julia.
Well, Morgan, of course, there's so much focus on Netflix losing the rights to shows like The Office and Friends, which are so popular. And they're, of course, losing those as NBC Universal and HBO Max both get ready to launch their services. Hastings addressing this in his letter to shareholders, saying much of our domestic and eventually global Disney catalog, as well as Friends, The Office, and some other licensed content will wind down over the coming years, freeing up budget for more original content. He says we don't have material viewing concentration as even our largest titles account for only a low single-digit percentage of streaming hours. So he's stressing here that they're not too reliant on their content, saying from what we've seen in the past when we drop strong catalog content, our members shift over to enjoying our other great content. So they're saying that they are protected even as they lose those big shows. And just another thing here, as they talk about why their subscriber growth number was so much less than expected, they basically say that it's because the slate in the quarter, the new shows in the quarter, did not attract as many new subscribers they expected, bigger hits. They say they'll have many more big hits in the third quarter. They say they're already off to a strong start at the beginning of Q3 with Stranger Things, soon Money Heist, and also 13 Reasons Why. So they say that that is why they did worse than expected in Q2, and that's why their forecast for subscriber additions in Q3 is stronger than expected, really stressing that it's all becoming a hit-driven business, just like everything else.
Yeah, Julia, they go on to say as well, across all regions in terms of missing their forecast, slightly, though, more so in regions that had price increases. They don't think competition was a factor because there wasn't that much new competition. Ross Gerber, let me go to you. I mean, there is going to be competition a year from now, by the way, when Disney Plus is out there, when Warner is out there, when even our own parent company, NBC, with an ad-supported free product is out there. What do you make on the numbers?
I think this numbers exactly proves that competition is something Netflix needs to worry about. Why do you think their numbers are down? It's called Game of Thrones. The bottom line is the entire world was watching that show last quarter, and it hurt their sub count. And that's what we were wondering. You know, this is a very illuminating quarter for Netflix because we think the future is going to be way tougher than the past for them. You know, the easy days are over, and this is showing in the numbers. If you have competition, Netflix will not grow as quickly, and that is coming in a big way.
Yeah, you know, Ed, something we've all been trying to talk about, certainly Jim and Carl and I talk about it in the morning on Squawk on the Street, is what will that competition mean? What will the world look like? Will people really maybe even say, okay, I'm going to cut my Netflix subscription, or will it just depress their ability to add subscribers? Don't know what comments we're going to get on that, but give me your take, and also, obviously, having read through what you can on the quarter here so far.
Before we get to my comments, one thing I want to point out, the U.S. subs, domestic subs, actually shrank 130,000 in the quarter. And I think, if that's not the first time, it's one of the few times. It's rare. I think Ross is right. I think Game of Thrones is a huge factor that Netflix, may not want to talk about. What a lot of people do with streaming services is that they'll cut their streaming service, buy another one, cut that one, go back to the other one as these sort of hits come around. So chances are, if you are a Game of Thrones fan or you didn't have HBO, you cut your Netflix sub, you went to HBO, and then they probably turned it back on in July with Stranger Things coming on.
Right.
Coming on. So,
but that kind of churn, you don't want to see that. You don't want to see that kind of churn too often. If you're, this is an outlier.
But this is a really big point.
This is a really big point.
Yeah, it is an outlier, and the other thing to note is that they kind of slightly upwardly revised their Q3 forecast. So that's the other thing to look at here. I think it's more a function of how they time their programming when things are coming out, more than it is that people don't want Netflix anymore, or it's not. I'm not going to see Friends anymore, kind of a thing. They're going to hold on to it. It's just they need to time their hits better.